Want to make your apartment investment a real cash cow? Here's how financial due diligence can help. Financial due diligence is like a health checkup for your investment. It's all about analyzing past performance to predict future gains. First up, income statements. Think of these as the property's report card, giving you a clear picture of revenue and expenses over time. Spotting trends here can point out opportunities or red flags. Next, we have balance sheets. These show the property's assets and liabilities like a snapshot of its financial stability. Knowing what's owed and what's owned helps you gauge if the investment stands on solid ground. And then, the rent roll. This is your go-to for understanding tenant dynamics, occupancy rates, rental income, and turnover. It's like reading the room to see if the property's income is rock solid. Now let's talk expenses. Breaking down costs, utilities, maintenance, taxes, paints a complete picture of operational outgoings. Look for areas to cut costs like energy-efficient upgrades or better insurance rates. Efficiency equals profitability. Verifying income sources is crucial too. Check that rental income aligns with market rates and don't overlook extra revenue from things like parking or laundry facilities. Every penny counts. Finally, assess any lease-up or value-add potential. Vacant units or renovation opportunities can transform an average property into a profit powerhouse. By digging into these financial details, you're not just investing in property, you're investing in peace of mind and future profits. Happy investing!